Bismillahirrahmanirrahim. First of all, I would like to introduce myself. My name is NADHIRAH binti Muhammad BAHRI. My matric number is 2020812644 and I'm from KBA 24958. So today I would like to present to you the introduction of Islamic Exchange Traded Funds, which is ETF. Islamic Exchange Traded Funds (ETF) that hold gold and silver bullions or bars are called Islamic ETF Gold and Silver. Islamic ETF units valued proportionally represent unit holders' undivided ownership of gold and silver holdings. The custodian will protect gold and silver while the fund is operating. The SSC made the consider this product, which use ribawi assets like gold and silver as the underlying asset. ETF combine the best features of open-ended funds with listed shares. A listed index tracking fund organized as a unit trust scheme or any other approved structures whose principal purpose is to attain the returns that correspond to the performance of a certain index, is the Securities Commission Malaysia's definition of an ETF. ETF are stock exchange list unit trusts. Because they replicate a market index, ETF are passively managed. Replicating or sampling the index holding will do this. Conventional ETF are ETF only track benchmark indices with Shariah compliant corporation. The administration ETF must also strictly follow Shariah and Islamic investment requirements. The Shariah Board Committee or Advisor oversees ETF. The Shariah Compliant Board Committee or Advisor will periodically audit and evaluate. A fund must go through a Shariah screening process before it becomes an ETF. The rules set by the Shariah Board Committee or Advisor of index provided the regulatory body and the fund itself are used to screen the index components. Shariah screening is done when deciding to invest and then on a regular basis while the investment is in place to make sure Shariah is always followed. Shariah compliance is checked on a regular basis and corporate actions like mergers and acquisitions, delisting and bankruptcy are taken into account. So the ETF is cleaned up every once in a while by separating any income that doesn't follow Shariah rules, giving it to charity and putting the money back together. Next is the features of instruments. Exchange traded funds, which is ETF, are a good investment option for investors with lower capital amounts. An ETF pays quarterly dividends on its underlying stocks. Because of this, they can keep funds for various periods throughout the quarter. Since they are managed stock, exchange traded funds provide investors with more favorable tax advantages than traditional mutual funds. The expense ratio of an ETF is significantly lower on an annual basis compared to that of a traditional mutual fund. The number of people who frequently invest in ETF may drive up the fees associated with doing so. Equity ETF are straightforward investment solutions that combine the simplicity of equity mutual funds with the flexibility of stock investing. These are index-based passive investment vehicles that hold securities in a similar ratio to the underlying index. Bonds and bond ETF are examples of fixed income instruments to which investors can gain exposure through debt ETF. Bonds not only give another source of income but also tend to lower the volatility of a portfolio. Debt ETF can be purchased and sold constantly at market rates on the cash market of the NSE. A commodity stock ETF invests in the common shares of commodity producers while a commodity ETF tracks change in the price of specific commodities like gold or oil. While the latter and stocks have a strong association, the former does not. A straight commodity ETF can be more sensible if a portfolio already includes stocks. An international ETF invests in securities with a foreign base that are passively managed around an underlying index that can vary greatly amongst fund managers.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and a very good morning to my fellow friends and to our lovely lecturer, Madam Asma. My name is AQILAH binti BAHRIN and my matric number is 2020X72196. So, what is the Shariah principles that can be related to this instrument? Let me continue. Gold and silver are ribawi commodity. So, any transaction that involving these commodities must strictly follow the Shariah rules for ribawi transactions. A number of traditions about the Prophet explain how to deal with gold and silver. Don't sell gold for gold unless it's equal in weight, nor silver for silver unless equal in weight. But you could sell gold for silver or silver for gold as you like. And according to one narration, trading in gold and silver that doesn't follow Shariah rules is usury, which is against the Islamic law. Abu Sa'id al-Khudri reported Allah's messenger as saying, "Gold is to be paid for by gold, silver by silver, wheat by wheat, barley by barley, dates by dates, salt by salt, light by light, and payment being made hand to hand. He who made an addition to it or asked for an addition, in fact, deal in usury, and the receiver and the giver are equally guilty." So, in order to trade these two ribawi goods, their values or size must be the same and they must be delivered on the spot. People nowadays are becoming more interested in buying gold as an investment. Banks, gold sale business, and fund manager are just some of the places that offer different ways to invest in gold. In the business world of today, gold is often used as a commodity to make money, and this shows the difference between society in the past that used gold as money to buy things and those that did not. And to be clear, Islam doesn't mind if people buy and sell gold as a commodity as long as they don't charge interest. This is clear from what Allah says in verse 275 of Surah Al-Baqarah that say, "Those who consume interest cannot stand on the day of its resurrection and accept as one stands who is being beaten by Satan into insanity." That is because they say trade is just like interest, but Allah has permitted trade and has forbidden interest. So, whoever has received an admonition from his Lord and deceased may have what is past and his affairs with Allah. But whoever returns to dealing in interest or usury, those are the companions of the fire. They will abide eternally therein. And lastly, gold and silver are both ribawi commodities. So, it is clear from Allah's statement above that gold investment, which is a current trend that has the potential to bring in big profit, must be based on Shariah rules and set up by Islam.
Assalamualaikum warahmatullahi wabarakatuh. My name is Amylia binti Ghazali. I will explain about the opinion from Muslim jurists based on a research paper by Hussein Luqmanul Hakim Badri and Kir 2012. They found that Islamic thinkers disagree about gold as an investment commodity. In that paper, gold is said to have the value of al-tamania, which is a dispute among some Islamic scholars about the law of placing gold as an investment subject. Some Islamic scholars think that investing in gold doesn't fit with the goals of Shariah and should not be done. Next, the group that use Allah's favor in this opinion, which Al-Ghazali calls disbelief in favor, illustrate the maqasid Shariah in gold and silver production. Gold and silver were not formed only because they were metals, he claimed. Instead, they show value and made trading easier. Muhammad was also used to buy and sell items. Even if gold and silver are noble and high, they are the way to gain everything else. The motivation to buy gold and silver is not the metals, as long as the gold buying and selling laws are observed. Shariah allows buying gold cheaply and selling it expensively. To trade these two ribawi things, they must be the same size or worth and provided to the other person immediately, as long as it doesn't violate Sharia law. Ibn Uthaymin fatwa allow purchasing and selling gold and holding it till the price rise. The sale or exchange of gold for gold, silver for silver, weight for weight, barley for barley, date for date, and salt for salt must be at the same rate, weight, or measure, and must be accompanied by joint submission by both parties. If it is of a different type, then buy and sell as you wish if it is handed over from hand to hand by both parties. The hadith made it clear that muamalah activities must be based on principle and in line with Sharia as long as they do not do anything illegal. Sharia allows gold investment activity as long as they follow the rules for bai'ah staff that have already been set up. That's all from me. Now I will pass to the next presenter.
Assalamualaikum, my name is HAZWANI binti ARIS and my metric number is 2020862058. In my part, I will explain the comparison between ETF and conventional instruments. The first comparison noticeable is their operation. For the ETF, it applies the Sharia concept in its operations and the methods to obtain the Sharia compliance validation use the Sharia principle. In order for the business to obtain this validation, it is necessary for the business to go through the Sharia screening (SC) process. This process to ensure the product being sold adheres to the principles outlined in Sharia. In the meantime, the traditional operation has been offering a variety of products and is not a primary focus on the halal products. Rather, they also offer haram products. The benchmark index used by the ETF is another way in which they differ from the conventional instruments. To learn how your portfolio or individual investments are doing in comparison to others, it's helpful to use a benchmark if you merely consider the overall success of the investing portfolio. You are missing crucial details. ETF can only track Islamic benchmark index if the underlying asset or company is a Sharia compliant. Meanwhile, conventional instruments only track in any desired index. In this case, it's possible that this isn't the best choice for the Islamic banking and finance sector. The last difference between the ETF and conventional instruments that we see is their transparency. ETF is transparent because ETFs list their holdings every day and can be traded multiple times a day at the lowest bid or ask spread. They need to be transparent because the products that they offer will be examined and known by the investor. For the conventional instruments, they don't really need to be transparent because the products that they sell are not looked at by the SC and the investor know that this company does not follow the Sharia law. That's all from me. I will pass the next presentation to another presenter. Thank you.
This is the structure of the instrument exchange traded fund. The first step is to choose which Islamic index is going to be benchmarked. It offers investors a straightforward and affordable option to access the portfolio of securities represented in the index in a single transaction. Screening on the chosen underlying asset will be done thoroughly and must in line with Sharia. The second step is the participating dealers have to deliver the basket to the trustee in order to create unit of ETF. ETF units represent underlying share. Third is this unit ETF will be given back to the participating dealers and eventually be bought by the investor via liquidity providers. Step 4 is having owned the ETF units. The investor can then trade them via a secondary market. And the last step is at the time of redemption, the participating dealers will accumulate and deliver to the manager and trustee the specific number of ETF units. As an exchange, the participating dealer will get back the perfect basket. That's all from me. Thank you.
Assalamualaikum, my name is Shariah MARAHAKIM. I will present about the case study of TradePlus Shariah Gold Tracker. Gold is a metal that is extremely valuable and used in daily life. It is utilized as an excellent heat and electricity conductor since it does not corrode or tarnish and has remained in a fine condition since ancient Egyptian times. Also, gold can be used as a medium of trade for products and services. It played a significant function as a money with a high denomination. Currently, gold is also utilized as an investment without requiring the storage of an actual gold or the insurance of gold bullion, such as the TradePlus Shariah Gold Tracker Fund. The fund is an exchange-traded fund whose units are tradable on the Bursa Malaysia Securities Exchange, and it is the first commodity exchange-traded fund that is listed in Malaysia. Putting money into the TradePlus Shariah Gold Tracker might get you a number of important advantages. To start, there won't be any hassle involved. Since the fund is listed on Bursa Malaysia Securities, investors can gain access to it through the internet trading platform at any time and from any location, including the convenience of their own homes. Because it has already been safeguarded, the investor does not really need to be concerned about the gold's insurance or its level of safety any longer. Then, purchasing gold through an investment is a fantastic option. As a result of its limited availability, it will never lose its value, making it an ideal hedge against inflation. From ancient times up until the present day, gold has been and will continue to be a precious and significant metal. Gold, in contrast to paper currency, is a tangible item that can be both held and transacted in. In addition to this, the gold can be maintained in pristine form for an exceptionally lengthy amount of time. It does not rust or discolor in any way. And perhaps more importantly, it is in accordance with Sharia law. The fund employs Sharia advisors to ensure that its business practices are in complete accordance with Islamic law, and it monitors these practices closely. As a conclusion, exchange-traded funds are a type of pool investment security that functions very similar to a mutual fund. But unlike mutual funds, which are not traded on an exchange and only trade once each day after the market closes, ETF can be bought or sold on a stock exchange in the same way as regular stock. From the price of a single commodity to a larger and more varied group of securities, the ETF can be designed to track anything. The most significant benefits of ETF include more trading freedom, improved portfolio diversification and risk management, cost reductions, and favorable tax consequences. Therefore, investing in exchange-traded funds is a very cost-effective and tax-efficient approach to gain exposure to a wide variety of asset classes. That's all from us. Thank you.